What is up? What is up? What is up? I just wanted to make this video because you want to trade. I know how to trade. Once you learn how to trade, language, ma'am. Anyway, sorry about that. Should have turned off my notifications before I started recording, but I'll try to make this quick anyway because it's so easy. Once you learn how to trade, it's so easy. It's not easy, right? It's never really easy. A lot of factors play into trading, so it could be stressful. I'll say that. And it takes a lot of mental headspace. So you always trade with a clear head, well rested, and yeah. So that being said, I'm just gonna go through my process right here. I kind of already had a video breaking down US30, but I'm gonna do it again because the first thing you got to do as a trader, you have to be able to break down a price action chart to be able to get in the markets at the optimal times, right? And also see where the opportunity lies. And when I say opportunity, I mean taking and placing a trade in which you come out profitable. So how are we going to do that, right? The first thing I do when I approach the markets is I want to say look at news, but given my current schedule, I don't look at news at all really, unless it's like the daily news that shows up on TradingView. But I mean actually like kind of go over the news for the pair that you're trading, and that'll definitely give you some insight also in how to form a bias, right? But first things first, I want to mark up right here. We see so immediately we need to look at market structure, right? And what's the most recent structure that we took out? Well, you can see that is clearly this. We have these highs from all the way in, this was last year. These highs that we got, this high in particular that we broke, this was well, look, see, we got December 21 to January 22. So this was literally this time last year, and we just broke past it that same time this year, right? So being that that is the immediate structure we broke, and to the upside, I'm already formulating a bias, right? We broke structure to the upside. Now the expected structure to form, right, based off of what the basics of market structure. And if you don't know the basics of market structure, do your research. I plan on dropping a video. I just kind of wanted to do this because I actually already made that market structure video, but I felt like why just stop there? So I'm breaking down my entire process so that anyone watching might be able to step by step follow me and be able to spot these opportunities in which, you know, they could come out profitable, right? Because we all want to make money. So anyway, we have our break of structure to the upside. So the expected structure to form is going to be a higher low. Where could we get that higher low? Well, I want to actually go down to the daily for that, because reason being is because, let's go back to the weekly real quick, but you could see like we broke this structure here, but we have all this momentum that actually pushed us past that structure. So this is where I want to be looking for price to kind of retrace this move right here. So let's go to the daily and see where we are. Okay, so we can see we're above price, right? And now we want to look at structures that have been broken here. So we can see here we were in an uptrend. It might not be clear if you don't have understanding of market structure, but here we have higher high, higher low, higher high, higher low, higher high, and a higher low. This would be the expected move. But what I want to highlight is that this structure that we broke here, we are now trading below it, right? So see, we broke it right here, came back down below it, retested and rejected the level. You kind of can't see it with this pointer in the way, but it's this candle right here. And I'll remove my pointer real quick so you can see the wick rejection from that range, and then price pushes down, right? Then we get another rejection from the downside and pushes price right back up to that range. And then we have today where price came down from that level. So let's go to the 4-hour again to just analyze this market and break it down. So here we could see, okay, we have structure, right, to the downside. And this is what I was trying to highlight on the daily, is that we are holding below this level. Now the reason that's important is because I'll just stop it right here. But the reason that's important is because when you're finding these levels of structure, it doesn't necessarily mean just because price made a higher high that we're going to start taking buys, right? What you want to notice is where price turned around to create that high, right? And you want to watch how price reacts, okay, around that level, especially once we come back under it, right? Because the market has to pull back at some point. It chose to pull back pretty immediately, and then it's made multiple attempts to push up and rejected every time, and has been creating lower highs in that, right? You can see we have a lower high here, lower high here, lower high here, right? And then it continues lower low, and then finally we get a higher high. So now that we have a higher high, I want to delete that, we can expect price, boom, lower low, higher high, to come somewhere in this area, create a higher low, and then push back to these highs, right? So now it's like we're formulating a thesis and a story. We're breaking everything down and looking at how prices respected the levels from the higher time frame. So now that we know these things about the higher time frame, looking on the lower time frame where it actually makes sense to trade, right? Because you don't want to be just strictly watching the higher time frame. You're probably never going to get a trade opportunity, right? You want to be able to day trade, not month trade or week trade. Although there is swing trading and position traders, and you could do that as well, but it still involves these kind of this form of analysis where you're spotting these key levels and you're making note of where price is rejecting, where could it be heading and stuff like that, by marking up these zones and following market structure, of course. So now that we have our break of structure to the upside, I want to go over supply and demand. So supply and demand is basically kind of like a high and a low, except it's more about presenting, or how do I say this? It's more about like the actual marking of that, right? Kind of how here we drew a line to signify that this was resistance, and it's resistance because we're underneath it and we've been pushing away from it towards the downside. It would be support if we were above it and pushing away towards the upside. However, the two go hand in hand. Now, supply and demand is basically just like finding those support and resistance and those highs and those lows, but it's kind of actually marking out. So here I'll draw this supply zone right here, and as you can see, it was tapped actually. And I say supply, I mean a demand. It's supply, just like support and resistance. Supply is resistance, demand is support. But it's kind of, supply and demand is different because it actually gives you kind of a way to draw out that zone. And the way I draw my supply demand is, so we have this push here. If it was a push down, then I would be drawing supply. The way I drew this demand, I mean, is we had this push here. So the demand would be the last bearish candle before the push, the bullish move, right? And then the low after that, or for supply, would be the high. So this is the last bearish candle, right? And we're going to mark our demand from the high to the lowest point after that candle. And it just happens to be the lowest point was also within that candle. So it's going to include the whole candle. And as you can see, we have had rejection, a nice rejection off of this. Now, the reason that's important is because wicks tell us where price basically doesn't want to go, right? At least in that time period, price came here, but then shot all the way back up here, showing that there is a lot of, the orders. When price got down here, orders got picked up enough so that it made the candle close all the way up here. Then we had our next candle of the day kind of push up and kind of push down and just formed a doji. It was the last candle of the day. Not a lot of liquidity, but if I was to take this trade, how it would be looking is not today, but because we have rejected this, now I could expect to see price head higher. So let's go to the 1 hour. Now on the 1 hour, we could also see kind of this bounce, right, off of demand. Now, how I would take this into consideration is, personally, because we had the rejection off of demand and then we had this engulfing candle, you could have entered a trade right there. Long position. At the close of that candle, or you could have even entered here at the rejection, which would have been a super tight stop, because we're going to put our stop loss below the zone. So we would enter here, stop loss below the zone. And for finding out where my take profit is going to be in this scenario, I like to use a Fibonacci from the highs to the lows of the move in which we're trading. And we could see here that this bounce is off of the 61.8. So really we could go ahead and move our stop loss below that candle that broke us back above the golden range, and or we could do it below the low, right? It's really kind of a personal preference. You just got to understand that technically price could come as low as here and still push all the way up. That's just because this is the low, the way market structure works. This is the low we're testing. It just so happens that we had a demand formed using this low that was tapped, as well as a push away from that, showing that there is buyers here, there is orders here at this level, and those orders took the price right back up above the golden ratio. So technically this is like the most conservative way you could put your stop loss. This is the more aggressive, like if price comes back and breaks this candle, you don't want to be in it, and we would just target our highest extension. But of course we will be looking to secure some profits around the zero, because this is the high in which market would have to break to continue this structure. So, and then also if you go back out to the 4 hour real quick, you could see that this kind of lines up with where we have our entry. Now see, because of how this 4 hour looks, I would probably want to just put it under the 4 hour candle. Well, you know what? No, that's good. The 1 hour is not bad for me. Let's do the 4 hour. Again, that's kind of personal preference, because obviously this candle shows us which way price wants to go. as well as that 1 hour candle that engulfed and pushed us past the golden zone. It shows us where price wants to go. So we just, you have to listen to the candles, because even though we made a higher high, like if this candle actually closed down here, I wouldn't have got in, because it shows that it still has momentum and strength to keep pushing down. So the fact that it did this is really telling, and that's why we could go ahead and expect that price isn't going to break the low of this candle, and price is going to start continuing the move from here. Sorry about that. Hopefully that wasn't too distracting. But yeah, so that's where we're looking for the move to continue, because the candle printed like that. That's why. It's not just because we have a demand zone or we reached a low point in the structural trend. No, it's the candles too, right? You have to see how they form, because they tell you what price wants to do, and that is basically what we would consider an entry or a confirmation candle. And all of this is considered confluence. If you hear that word, that's what confluence is. It's all the information that you use to formulate your bias, right? And our bias is very bullish, clearly, because we have our breakup structure to the upside, we have our rejection off of the demand. So that essentially is our higher low. Now we're expecting the higher high, right? And so that's why market structure is very discretionary, to what is actually going on in the moment, kind of. Like, yes, we started at the weekly, but that was just one tidbit of information. We seen what happened on the weekly, the break of the high, right? That kind of got us feeling bullish. Then on the daily, you could see that price had slowed down a lot. And earlier this week, I took sales on US30. However, now that price has created this higher high, I'm looking for price to test those daily levels. And that's why I kind of wanted to go out to the daily, the 4 hour, because when it comes to where we could target those highs on the day, and we could see they line up perfectly with our 27 extension on our Fibonacci. And so that might be a potential place to get out. Certainly, like I said, 1-to-1, this first resistance that we'll meet is also a good exit. I mean, obviously you want to milk the market for as much as you can, and you want to get something crazy like a 1-to-4, right? But it's also, it just depends on what the market wants to give us. So that's just based off of what I'm seeing right now, right? Where price could go to that 27 extension, or yeah, that's kind of where I'm seeing it could go, that 27 extension, which would give us, ooh, wow, how far did I draw that? Which would give us a 1 to almost a 1-to-2. Just depends on where you want to get in on this. I'm going to wait for market to open tomorrow, though, and see what actually happens, because market just closed. So obviously you wouldn't take this entry based off of that because of the time. So it's also, time is important, because just because we had orders here, people could have set their orders before the market, and then just that was it. Because you see, this was like hours, right? We could have seen this kind of happening once we started pushing down, right? We could have seen price coming to this level, and traded it. So why does it look like, didn't I take this on the hourly, or was it the 4-hour? Okay, yeah, that was the 4-hour demand, not the hourly demand. But yeah, also, I mean, I personally would have probably entered this, even with it just being the end of the session. I would have entered this and been ready to chase price all the way up here. So, but if if I got out here, cool. If I get out here, cool. Um, yeah. So that's kind of how I trade. Hopefully all of that makes sense. Hopefully all of that equated to an opportunity for you, maybe in the future. I know I probably need to answer some questions on how to use the Fibonacci more in supply and demand, maybe. Whatever you have questions on, though. I tried to make this video as quick as I could and just draw out or explain my process, because that's literally how I trade. And actually, I kind of want to put that stuff back on. Yeah, take out the position, but as far as this goes, I want to keep it on because I might trade US30 now this week again, especially after just breaking it down for you guys. I'm already ready to see where it's going to go. So, I mean, that's currently where we are in the US30 market, if you wanted to know, but also that is how I trade. So, hopefully you feel like maybe you can do this, and then this was informative for you. If you don't feel like this is for you, hopefully this video helps you figure that out, because I mean, yeah, this is what you're gonna have to do every time you place a trade, or otherwise, oops, my voice cracked. Jesus Christ, I'm 26. I swear to God. But this is what you want to do. Otherwise, you're not setting yourself up for success. If you're not formulating your biases based off of the market data, then what are you formulating it off of? How did you decide to take a buy or a sell? So, it's kind of something you're gonna have to be comfortable with doing every time, and it can get confusing at first, especially not understanding, or when you're trying to like figure out what all these moving parts do and what they're called and stuff like that. And it could take a while to actually be able to process it, because you're just learning the vocabulary to it all. And so no rush there, even though I wanted to rush and make this a video, but a short video, just because I know people don't want to have to go scouring the internet for all of this information. I'm trying to just leave it here in one place. If you got to watch the video 6 times, cool, but basically that's my style of trading. That's my strategy, you could say. That's how I set up, though. That's my process, step by step. So hopefully it made sense. Hopefully you're able to take something away from this, and no matter how many times you have to watch it, hopefully there's some gems in there for you if you're someone who finds themselves wanting to delve into this field. Or even if you're already a trader, hopefully the way I trade maybe have provided some insight for you too, that you could take, and like maybe you didn't get the thing, like the market structure thing, or I don't know how you trade if you're already a trader, but and then you probably already have your way of trading. This is how I do it, and that's all I can hope, is that the information helps. That being said, I know I done talked your ears off, not even about trading the last minute and some change, so I'm gonna let you get out of here. I'm gonna get out of here. Happy trading. God bless. Good luck to everyone in all your endeavors.